All right, I got a great question from member Marcia. Thank you for the question, by the way. Excellent question. It's like, how do I know when to sell? And you have to know yourself. Nobody can tell you really when to sell a stock. Hopefully, you're not waiting for a signal to sell. You have to know who you are as a person, first of all, your personality, and as a trader. Are you a day trader just looking for 3, 4, 5%? Are you a swing trader looking for 10%, or you're a position trader looking, to hit home runs and grand slams and having long-term positions pay off big for you? So you kind of have to know that before going in, but sometimes, stocks will surprise you. Like you buy a stock and think, oh, it's just going to be a little swing trade. I'm going to take 10% and move on to the next trade. And then it blasts higher and you have, greater gains than you ever thought you would. But anyway, I'm going to talk a little bit about trimming stocks, selling your positions, and the market conditions have a great deal to do with how aggressive you should be in the market. Like right now, we're in a really strong bull market, and you kind of want to let things run and get the maximum out of your positions. In other markets, sideways markets, you're probably taking profits a lot quicker. So the market conditions to me are the number one criteria when buying and selling stocks. And right now we're in a fantastic market. So anyway, I'll just say that um, my first sell signal is whenever I buy a stock. This is Nvidia here, and we had it at like $500. And so if I bought Nvidia at $500 and it traded down to 473, I would sell that stock because I'm not going to take more than a 4 or 5% loss on it. Now, I might have had the right stock and just bought it at the wrong time. So I'd keep that on my watch list, even though I sold it. And as it, goes through at pivot point at $500 there, I buy it back again. So the first order of business is not to lose money, manage your risk. And if you're down more than 4%, just sell it and you can always buy it back. Don't try to argue with the market, because that's how you lose big money. You want to avoid big losses. So this is Nvidia. Let's just say I bought it here at 504 and it went down to 473. I would sell it. But if it rams through its pivot point like it did on January 8th, you buy it back there, full position. And if you're a swing trader, you would sell that position, 1/3 of it, a partial sell as a swing trader at 10% gain, which would be obviously $550. And you would take another third at $600 right here, where it kind of went flat there. And so you let the third run, which it is run very nicely as it's up to $852. So you have to know yourself as a person, like, would you be upset if you sold 2/3 of your stock at 600 and went to 852? To me, I wouldn't, because if I'm a swing trader and I took a partial at 10%, another partial at 20%, and I let the rest run, I'm happy with that trade. I don't have regrets like that, but some people do. And, it's hard for them to accept the fact that they left a lot of meat on the bone. So you have to know that as a person yourself, your personality. How much can you tolerate? Like I cannot tolerate downturns, and I'm going to get to that in a minute. But for a swing trader, you buy, you take a partial at 10, you take another partial, third. So you have 1/3 left and you let it run. And that's an ideal trade. But, I bought SMCI at, $90. And then, I got to go back a little bit because it's been a while since it did this. Okay. So here is a buy point there at, there you can see it was in a base and then it ran higher. So I'm going through there. It sliced its 50. I had traded SMCI many times and it sliced its 50 many times. And another one of my sell rules is to sell when it slices the 50. So I was playing by my rules. Okay. So every time, I'd buy it, it would slice at 50, I'd sell it. So I was losing money on a stock that's really going higher. So I said, you know what? I'm just going to buy it. And if it slices its 50, I don't care. I'm going to hold on to it. So that's what I did here. I bought it around 95 and it sliced its 50 down to 93. And I said, I don't care. I'm going to hold on to it. And then it just ripped higher. I don't know, it was an earnings report or whatever. But and then so for me, I just wanted to hang on to it and see what I could get out of it. If I would have sold this, let's just say I bought it for the sake of the argument at 100, and I sold at 110, 10% partial, and then another 10 at a 120 for a 20% partial gain. Then I'd left a third to run. I'd be really kicking myself if this thing ran all the way to 350 like it did. So I just I hung on to this one. I didn't want to swing trade it. And you could see what this thing did. It went up to like 357 before its earnings report, and it fell out and then made a big base. And then you guys know what happened since then. But so that's what I'm saying. I would have felt bad if I would have just sold everything for a swing trade at 10%. And it ran up to, whatever, 350 and formed this base and then went up to 1,000 again. I would feel horrible. So you have to kind of know yourself. That's all I can say is you got to know yourself. But for sure, sell for me, a 4 or 5% loss, guaranteed sell. If I'm swing trading, 10% partials, but really want to let them run. This is art, not science. So you have to kind of play it by ear and what you can tolerate. And also I mentioned that I sell when it slices to 50. I'm sorry, but I have to do that. That rule can save you a lot of pain. And even, Tesla sliced at 50, and then it took forever. This is classic right here. It sliced its 50 on October 19th. This is when the market just started to rally. And then it came up and rallied through its moving average. It's kind of weekly though. See how long it took forever for it to do that. And then it sliced it again. So I wouldn't have bought this on the way back up. And now I'm glad I let Tesla go because it sliced its 50, its 200 and everything else. And it's just that rule will save you money. I've done it many, many, many times. And yeah, sometimes they'll run right back through and you can always buy them back. But here's Apple again, sliced the 50, ran right through it. It looks like a buy. No, not really. Sliced it again. Now this time it slices 200, ran up to the 50 and got rejected at the 50. And that's a good short right there. And now today it got rejected. Well, last week it got rejected at 200, and man, this thing fell out of bed today, 2.5%. So that's why another one of my rules, sell at the 50. Okay. So don't take more than a 4 or 5% loss. Sell it when it slices the 50. And then if you're swing trading, take those profits at 10% and 20% partials, because most stocks are going to go up, 10, 20% when they run, they go up 20% in base. This one here, Abercrombie and Fitch is just this is an anomaly here where it breaks out and runs forever. Most stocks don't do that, so if you took partials there, you'd be sick, and, you left all that on the table there. Anyway, so that's why I say you have to know yourself. Also, you can sell aggressively, like Elf. Elf broke out of a base recently, and it's kind of it was trading along this upper trend line. It kind of broke that channel and started really ripping hard. And that's why I thought it was going to have trouble with 200, and I would be happy if it just traded sideways here. But if you sold anywhere above 200, I think that's a good sell. Not completely, if you just trimmed a third, that's fine. And if you wanted to hold that for further gains, because Elf has shown that it has the ability to run real hard, and it's broken its upper channel line many, many times along the way. So just because it does that doesn't mean it's going to pull back to its 50 or form a base or anything like that. It could just go sideways for a couple of weeks. Hopefully that's all it does. So like I said, the market conditions are really fantastic right now. So I wouldn't be too I wouldn't be in too much of a hurry to sell. There's a lot of stocks like Vert, that are just running up like this. CrowdStrike did this. They report tomorrow. Now I would sell this, pulled back to its 50. I would not hold that through earnings. But that's another thing, holding through earnings. Celsius. I don't like to hold through earnings because I don't like to get blown up. You have to have a big cushion which is another topic for another time. But this one ran through its 50, like I said, it sliced its 50 sell, ran back through its 50. So that was a buy. We had that as a buy point. But it's hard to hold, when there was just this little time before earnings. It did trade higher, but that to me would have been, a really tough hold into earnings, unless you had an idea that they were going to crush earnings. But like I say, most stocks will break out of a base and run up, I don't know, 20 to 25%, and then they're going to, form a base. This is a classic example here of Power. This was on our ready list back in the day. I guess it was October. So 187, it ran up to 219. That's a perfect, area to, cut some loose if you want to hold on to some. But now you have to sit through a base here. This base building process this is like 8 or 9 weeks, right? So I don't know if you have the tolerance, that was 9 weeks, to sit through that. 9 weeks where it's an opportunity cost. The market was ripping in January and February, and you're watching this one set up in a base. So, and it traded below its 50 for a little bit there. So I definitely would have sold this one. But other people, like the stock, they might want to sit in it. Obviously, it traded higher, it worked out. But most stocks will do that. They'll break out of a base, they'll run up 20, 25%, then they'll form another base. That's a classic example. So, like I said, you have to know yourself, who you are as a person and as a trader. But I do have those steadfast rules where I sell at a 4 or 5% loss. I sell when it slices at 50 aggressively. I will trim some when it breaks an upper channel line. And if you have any questions, hopefully this answers your question. But if you have any further questions, please ask them. And if I miss something, I do that often. But anyway, thank you for the question. It was a great question, and we never give up.